Welcome back everyone, and today I will be reviewing the Friday, March 8, 2024 market. Today is special that because I found that there is a setup in Friday after the silver bullet time, which is between 11 to 12, and I think this is a very good reviews for you guys to learn because uh, I can teach you how to find the setup during the NFP day because Friday is NFP news day. Sometimes NFP days will be very volatile and it may not give you any setup during the day, but in Friday I can see there is a setup form. So today I will review the Friday market review for you, and I hope you learn something from it. Uh, Initially, because I do not want to make this video because I have made two videos previously for Wednesday and Thursday, but because today I'm a bit uh, free and I would want to teach you more about how to trade during NFP days. So let's move on. I will break down the charts for you. Right, back to the daily charts. What you can see is that there is a sell side liquidity below and it has not taken. And for Wednesday and Thursday, my bias is if the market wants to go long, it would just go into the premium area, which you can take out your Fibonacci to measure from the swing high and the swing low. The 0.5 above is premium. In the premium, I would want to find the fair value gap, which is the bearish fair value, because the market is. I would want to predict the markets to go bearish, and if the market does not want to go lower during the next day, I would predict the market may want to go back into the premium bearish fair value gaps in the 1 hour and 15-minute time frame. So after the Thursday market has reached the premium fair value gaps in the Friday, I would expect the markets to go short to take out the sell side liquidity without take out the buy side liquidity. And it also, because of the NFP days, I will wait until the news happen and see what does the market will do. So let's go to 1 hour charts. Right now in 1 hour charts, as yesterday Thursday market, the market has buy overbought and breaks the bearish fair value gaps. It stays on the swing high of the 4 o'clock March 4, and it did not take out the buy side liquidity. After that, it goes lower. While my predictions for Friday is I do not know what happened to the markets because there is a buy side liquidity here, and I want the markets to take out the buy side liquidity and go short during the 9:50 to 11 to give me the setup for shorts. Because in Thursday the market does not after it rebalances into the bearish fair value and it goes shorts, because I do not want the markets to take out the buy side liquidity. So if these situations, I will wait until the confirmation of the market before I determine the bias is long or short. Now I will go further into 50-minute and lower time frame to find out and determine my bias. As you all know, during the Friday, there is a NFP news announced in 8:30 New York opening time. So in this chart, you can see that the market has swept lower, and it also swept higher during this 15-minute time frame, and it breaks the buy side liquidity. So in this chart, you can see that the market has swept the both side of the liquidity, which is the buy side liquidity and sell side liquidity. Where is the sell side liquidity? This is not the market did not sweep this sell side liquidity. Instead, it swept this liquidity and it stays inside this bearish value gap. If the bearish value gap is failed to support the market from going higher, the value gap will become a inversion value gaps. Inversion value gap means if bearish value gap fails, it will become a bullish fair value gaps, inversion fair gaps to support the market from going lower. So after the sell side liquidity sweep during the 8:30 a.m., sell side liquidity is taken, and I will want the markets to go higher. As I already know that the daily buyers, the market already sweep the buy side liquidity during the 15 minutes news happen. It sweeps the daily buy side liquidity. So I do not know that if the market will be going lower or it will continues to go higher, because my bias is short. As you can see in daily bias, the market has not taken out the sell side liquidity. So in Friday, I will want the markets to go, I will want to predict the markets to go lower to take out the sell side liquidity after when the market take out the buy side liquidity. So I'm very patient that I want to see in higher time frame what does the market do. While during 9:30 in the 15-minute chart frame, the market has go lower and it hits the order block. This is the order block. Order block means if the the order block rejects the market from going lower, it means that during the 9:30 to 10 or after 9:30, this is 9:30 candle, it will show you that the market will want to take out the high, or it will go long during the AM sessions, because my base time trading time is starting from 9:50 to 12 the AM sessions. So that's going to the smaller time frame after you see that the rejection of the order blocks. As in 5 minutes, after the order block has rejected the market from going lower, I do not see any fair value gaps in the 5-minute time frame. So I will go into 3-minute time frame. In 3 minutes time frame, the market has created a strong displacement higher and it breaks this swing high, while it also create a fair value gaps. So if I am trading for 3 minutes, I will go into 1 minute to see if there is a smaller fair value gaps for me to enter in. So let's go to 1 minute time frame. In 1 minute time frame, I can see that there is a very small fair value gap here and an order block. So I am waiting for the markets to rebalance into the bullish fair value gaps, and I would take a long positions until it breaks the swing high here, because I do not know how high is the market is going. But then the market did not rebalance into this bullish value gap, and it continue to go higher and higher because it already breaks this high, this buy side liquidity. And while it also breaks the previous buy side liquidity in the daily time frame, while I do not know how high is the market will be going during the NFP days, so I did not chase for the long position. If the market does not want to rebalance this bullish value gap and before it goes higher, I would not want to chase higher or trade here and go higher. I'll wait another confirmations in the 15-minute or 1 hour or even 5 minute. Is there any reversal? Maybe after the market has reached higher and higher, the market may not want to go even higher, because I already said that there is a sell side liquidity resting below. The market has not taken out, so I do not want to chase long. After that, after the sell does not form, I will wait until the market do reversal or giving me another setup for longs in the higher time frame. Now I will go back to 15-minute chart, because I do not know what does the market do during the 10 a.m. to 11:00 bullet time. Because after 10:30, the market has reached the high and it goes lower, but for the day, the market is still bullish. As you can see, the sell side liquidity is taken and the market has stayed in the order block and it goes higher during the 9:30 a.m. New York time. The market for the day is still bullish. I do not want to go short as if the market is bullish. That is bullish. You cannot force the markets to go bearish during the time. If you want to go short, you need to have a confirmation at the higher time frame, which is the daily or 1 hour or 50 minutes or even 5 minutes. 3 minutes and 1 minute is the time frame you are finding for setup or the execution time frame. Let's go back to 15 minutes. Back to 15-minute charts. This is a bullish fair value gap that the market has created. After the market has break the swing high or the buy side liquidity, it may retrace back into this fair value gap. After it rebalances, it will continue to go higher. Let me draw it. It will continue to go higher after it reach the bullish fair value gaps. At the time, I do not know what does the market wants to go, because if the market is bullish, it will just retrace back into this fair value gap and continue higher. While if you want to, if you want to go short, you need to wait until the market has break this swing low. You see this is a market structure shift here. After it breaks this swing low, I can be confirmed that the market will want to go short to attack this sell side liquidity or the sell side liquidity resting here. After the confirmation of this swing low has been break and create a displacement, I will directly go into the small time frame to find the setup. Because the market has break the swing low means that the market has changed its structures. It did not want to continue go higher, so you can be confirmed that the market is going bearish. Now I will go into 5 minutes, 3 minutes, 1 minute to find the setup after the break, the bearish market structure shift. Into the 5-minute charts, after this swing low has been break, I can see there is a bullish, the up close candle, the green candle here. Up close candle is order block for the bearish order block, and the market has break the order block, and I assume that the market will not come up into the premium fair value gap. Means this is a breakaway gap. I do not want to see the markets to retrace back into this fair value gap, bearish fair value gap, and it goes shorts again. I will want the markets to continue to go lower and take out the sell side liquidity, because this is an order block. Order block means it will reject the market from going higher. If the order block fails to reject or the market does not stay below the order block, means the market is consolidating, or you shouldn't take any trade during the day. As in here, the market has already shown a strong displacement lower and it breaks the order block. And you see that this is upward pressure, means the market will not want to go higher if this is order block. So let's go into 3 minutes to find the fair value gaps for you to go short, and your target will be this sell side liquidity. The time during after it breaks swing low is during 11:10. It's still in the AM session and the macro time 10:50 to 11:10, so you still can trade during the time. Let's go into 3-minute one. In 3 minutes, there is no fair value gaps, so I will direct go into the 1 minute to find the fair value gap. This is how you cycle the 5 minutes to 1 minute time frame to find your setup, which is the fair value gaps. Let's go into 1 minute. In the 1 minute chart, we can see that there is a fair value gap here and the order block. You can enter your setup right here. This is your ideas entry here. Let me draw for you. This is your entry, the fair value gap you should execute on your target, you can hold until the sell side liquidity here. How do you place your stop loss? You should place your stop loss above this swing high, or you can put on the second candle of the fair value gap. As you can see, there is a very small fair value gap in here, 11.15. So I would put my stop loss on the swing high and above the order block. After you take the execution, you can wait until the markets to reach your target. The first partial will be here, and the second partial will be another sell side liquidity. The time it reached the sell side liquidity is at 11:32 a.m. New York time. In today, I hope that you have learned how to trade with or how to determine the bias using a higher time frame. High time frame is your main to find your bias. You shouldn't use 3 minutes to 1 minute or 1 minute to find the market structure shift or liquidity sweep in the low time frame, because this is not as precise as not accurate as in the higher time frame. After you practice how to determine from the high bias to lower bias, that means that you have mastered the ICT trading concept, the smart money concept, the liquidity graphs, and how to determine the bias. I hope that you'll be successful in the futures. I will see you soon. Take care.